Hey guys, it's Ken here. Welcome back to my channel and welcome back to another video. Now, as most of you guys know, I've been investing in income producing real estate for the past few years and I've been very successful. I currently have 8 tenants and all my properties are cash flowing tremendously. Now, if you're looking to purchase your first rental property, I'm going to be providing an ultimate step-by-step guide in this video to help you do so. I guarantee you, if you follow all these steps through, you will be successful in real estate investing. If you like this video, please remember to smash that like button for me and also subscribe to my channel. It really helps me a lot and helps the channel. Without further ado, let's get into it. The first step is to educate yourself on the different kinds of income producing real estate investing opportunities out there and decide which one is best for you. There are many different ways you can get started in income producing real estate investing, such as house hacking, Airbnb, single family rentals, multi-family rentals, commercial real estate investing, REITs. The list goes on and on. You have to understand the pros and cons of each before deciding which one you want to get into. Remember the first rule of investing: never invest in anything you don't understand. What works for one person might not work for you. For example, if you don't have a whole lot of money to get started, you might want to consider house hacking or single family rentals. If you have more money to get started in, you might want to consider multi-family rentals. Now, if you have money, but you don't have the time to be involved in managing your rental properties, you might want to consider REITs, okay? There are several opportunities out there. The most important thing is to understand which one works for you and get started ASAP. Now, I don't have enough time in this video to go through the pros and cons of each method, but there are lots of resources out there that you could tap into, such as real estate books, YouTube videos, networking, blogs, mentorship. Okay, what is most important is you need to be well educated before you get started. So after you've decided on the type of income producing real estate investment opportunity you want to pursue, the second step is to determine how much money you would need to close the deal and start working towards saving that amount. In order to do that, you need to have an idea of the cost of the investment property you're interested in and other associated fees that will be required to close the deal. If you're looking to house hack or purchase a single family home for yourself, you can get by with a minimum of 3.5% down payment on the purchase price of a property if you use an FHA loan. If you're looking to purchase a single family rental or a small multi-family rental, most lenders will require a minimum of 15 to 20% down payment on the purchase price of the home. If you're looking to purchase a multi-family property that has 5 or more units, most lenders might require a minimum of 25 to 30% down payment. So take, for example, you intend to purchase a $200,000 home that you want to house hack, meaning you're going to live in one room and maybe rent out the other rooms out. You could purchase this property by putting down 3.5% down payment, so that would be $7,000. You could also estimate that the closing cost would be about 2%. So closing costs is an additional cost that you have to pay when you close the deal, and this cost cover things like lender fees, appraisal fees, title insurance, escrow, and things like that. Okay, so we assume 2% closing cost fees, and this will be 2% off the purchase price. So you're looking at $4,000. And some lenders will also want to see some reserves in your account. Okay, so they might require 3 to 6 months reserves on your principal, interest, taxes, and insurance. So take this property, $200,000 home. You get a 30-year fixed loan mortgage, and interest rate is about 3%. Your total monthly payment, which covers your principal, interest, taxes, and insurance, would be about $1,200. A 6 months reserve would be about $7,200. So in total, when you add up all the costs involved in closing, $7,000, $4,000, $7,200, that's $19,000. Now, out of this $19,000, you only have to pay $11,000 at closing. Okay, so this will be your down payment and closing costs, but the banks will still want to see an extra, $7,000 to $8,000 in reserves. So, your goal therefore would then be to save $19,000 in order to show the bank that you're prepared to purchase the property. The third step to purchasing your first rental property is to have a very good understanding of financing and lender requirements. Okay, this is very important because you want to make sure that you meet all those requirements to qualify for a loan. Now, the easiest way to do this is to contact one or two lenders and just ask them. Okay, when asking them, the aim is not to ask for a loan or have them run your credit. The aim is to get a good understanding of what factors they look at when qualifying an individual for a loan. Now, different lenders have different requirements, okay? Some of the common requirements that lenders look at are your debt to income ratio, or DTI. So debt to income ratio basically is your total monthly debt divided by your total monthly income, okay? So you can add up all your debt. So this could be car loan debt, mortgage debt, student loan debt, credit card debt, whatever money you owe or whatever payment you make every month, add all those up together and then divide it by your total gross income. So this could be your W-2 9-to-5 income or any other bonuses that you have, or alimony income, child support income that you have. Add everything together. Now that ratio, the total debt divided by the total income, has to be less than 50%, okay, in order to qualify for a loan. Now, if you can get that ratio lower, it could also help you by paying less on your PMI. PMI stands for private mortgage insurance, and it's typically required if you're putting down less than 20% down payment on the purchase price of the home. So if you have a debt to income ratio of say 30%, your PMI monthly payment is going to be lower than someone who has a debt to income ratio of 50%. If your debt to income ratio is more than 50%, most likely you won't qualify for a loan. Okay, so you can look at that and know where you are. If your debt to income ratio is more than 50%, you might consider paying off some of your debt to reduce your total debt, or you can maybe sell off some things, like if you have a car loan and you don't really need that car, you can sell that car so that your total debt is being reduced. Or you could also work on increasing your income so that your debt to income ratio falls down even lower. The second factor most lenders look at is your credit score, okay? And most lenders require a credit score greater than 580 to qualify you for a loan. Now, the higher your credit score, obviously, the better rate you're going to obtain. For most lenders, if you have greater than 740 credit score, you could qualify for the lowest rates. Another common factor that most lenders look at is your income. Okay, and usually the income they look at is what is reported on your tax return from the previous year. Okay, some lenders might go back maybe 2 or 3 years and try to see how your income has progressed over the years. Is it going down? Is it going up? Is it stagnant? And then they might decide to either use the lowest or the most recent income, or maybe just the average. Okay, so these are questions that you want to ask lenders. Typically, when I started, I contacted about 3 different lenders just to get an average opinion on what the overall requirements would be. And then I started working towards getting myself prepared so that I meet all the requirements when the time came for me to apply for a loan. The fourth step to take before purchasing your first rental property is to learn how to analyze deals for maximum return. Now, this is the most important step you need to take if you want to become a successful real estate investor. You have to learn to know how to run numbers on different properties and be confident of the returns that you're going to get before you even make that purchase. Now, this is very important because that's the only way you're going to know if a property is going to be profitable or not, or if it's going to be worth your time and money. Now, there are different metrics I look at when analyzing a deal, but typically I look at the overall return on the property, which consists of the cash flow, the principal pay down, the tax benefits, and also the appreciation. Now, one of the metrics I use when evaluating different properties is my cash on cash return. Okay, and I talked about this in a previous video which I posted a while back. I'm going to post the link down below to show you how to run numbers on a deal. But basically, the cash on cash return is basically the total net income obtained that I obtained divided by the total amount of capital that I put in or invested when purchasing that property on a percentage basis. So typically my target is about 8%, meaning that out of the total money that I invested, so say I put down $50,000 when closing the deal, my net income after all expenses are paid for has to be 8% of that $50,000. Okay. Now, anything below that, I don't think or consider it to be worth my time and money. Now, that doesn't mean that you shouldn't. Okay. Different markets might require different metrics, but just for the market I typically invest in, I always maintain a minimum or require a minimum 8% cash on cash return. Another metric I look at is the cash flow. Okay, so the cash flow is just the net income received, on an annual basis, and typically I require a minimum of $6,000 for it to be worth my time. Now, it doesn't matter what the cash on cash return is. Okay, the cash on cash return could be like 50%, but if my cash flow is still less than $6,000, I don't consider it worth my time and money. Okay, so again, that could be different for different people. You have to consider what's most important for you based on your financial goals and where you are. Now, as I keep investing and building my portfolio, my cash flow amount definitely won't stay at 6,000. It's going to increase, but based on my current financial situation, I think $6,000 is a good starting point for me. Okay, so these are things that you have to determine, but you can't know this if you don't know how to run the numbers. Okay, so you have to run the numbers, practice until you're confident enough to analyze any deal out there. And also, it's very important for you to have metrics, because if you don't have metrics, when the time comes for you to purchase a property, you might be tempted to purchase a property out of emotions instead of out of logic. So in order to remove all the emotions out of it, like when I see a house and say, oh wow, it has nice countertops and nice floorings, and then if the numbers don't work, I don't purchase it. So that's why I put down metrics to help me decide based on the math if the property is worth an investment for me or not. The fifth step to purchasing your first rental property is to get pre-approved for a loan or get a pre-approval letter. Now, this is very important for two reasons. First, it tells the seller that you're not only a serious buyer, but also a qualified buyer. See, before you can get a pre-approval letter, a bank will need to run your credit and also evaluate your overall financial situation in order to determine how much of a loan you can qualify for. And this shows the seller that you have the resources needed to qualify or to close a deal. So they don't spend their time, working with buyers who are not qualified, okay, or who don't have the resources to close a deal when they have a qualified buyer like you. The second reason why getting a pre-approval letter ahead of time is important is that it helps you narrow down the cost of a property you should be looking at. You see, one of the things that the bank should be able to do is give you or let you know the maximum amounts of loan you would qualify for. So this will enable you to decide or determine how much of a property you can afford. The last thing you want to do is, you go through the process, you analyze the deal, find a deal that really works, put in an offer, and then when it comes to obtaining a loan from the bank, you realize that you don't qualify for that. Okay, so you want to get a pre-approval stage done ahead of time, so you know how much money you qualify for, and you focus on properties within that price range. You also want to shop for the best rate. So typically I contact 3 to 5 lenders, and then I ask them questions about the rates, the lender fees, and things like that to determine what the best rates would be. Now, one mistake I see most people do is they contact the first lender that comes their way, and you never know if there are other lenders out there that have lower rates or better terms. So it's always good to contact typically 3 to 5 lenders. They're all going to run your credit. It shouldn't affect your credit score that much. The aim is to compare what their rates are, and if you can even take it a step further, okay, if you find a lender that you really like but they have a higher rate, and I've done this before, you could take the rates from a lender you don't like and use that to negotiate with the other lender that you like. Maybe the other lender has better customer service. You can use that as leverage and see if they can bring their rates down. I've done that before on my second property and it actually worked. Okay, so two things: you want to get your pre-approval letter ahead of time. Also, you want to contact 3 to 5 different lenders to get the best rates possible. The sixth step to purchasing your first rental property is to contact a good buyer's real estate agent. A good buyer's real estate agent is one that has your best interest as the buyer in mind. He or she would be able to walk you through the entire process of finding deals either on the MLS or off market through closing the deal. A good buyer's real estate agent will also help you during the negotiation process and ensuring that you get the best price and terms for yourself. He or she will also be able to help you contact an inspector, appraiser, the closing attorney, and ensure that all the documents that are needed to close the deal are obtained in a timely manner. So contacting a good real estate agent is very important, and it costs nothing to you. Typically, the seller would be responsible for paying the fees for the real estate agent. So it costs nothing to you. I always recommend interviewing 1 or 2 agents out there after reviewing their profiles to ensure that you're working with someone who has good credibility and a track record of success. The 7th step to take when purchasing your first rental property is to prepare for the things that you're going to do after you close on the property. Now, what do I mean by this? Sometimes you might purchase a property that needs to have some renovation done or have some work done afterwards before you can rent it out to tenants. You want to make sure that you have processes in place so that when you close, you don't waste too much time contacting contractors or other vendors to get the work done. Okay, so maximize the time that you have before closing by having contractors look through the properties and determine what work needs to be done, and also provide quotes for you so that once you close on the property, they can start working on the property and get everything done as soon as possible. Also, if you tend to house hack, you might want to start looking at some furniture that you put in the house, maybe in some of the bedrooms that you're going to rent out, so that once you close on the deal, you can easily and quickly just get those furnitures inside and have them rented out. So after you've closed the deal and you've completed all renovation work, the final step is to rent out the property. Now, there are different things you need to do when renting out a property. The first one of them is advertising. Okay, I strongly encourage you to advertise the rental property in as many websites as possible so you can get as many leads as possible. Okay, so you have the Zillows, you have the Craigslist, you have the Facebook Marketplace. Take advantage of the different mediums for you to advertise your property. The more leads you get, the faster you're going to be able to rent out that property. The second thing you need to do is background check and credit check. Now, this is very important. I've seen so many investors skip this step because they're in a haste to find a tenant. Conducting a detailed background check would save you a hell lot of trouble in the future. So I strongly advise you to make out time to conduct that, and that way you can know and find out if there are any issues with any of the tenants that you want to rent your property to. The next step for you to do is to create a lease, an ironclad lease that covers everything you want covered in that. And this is going to be signed by both parties, yourself and the tenant. Okay, this is very important because if there's any issue that comes up in the future, a court is going to look at the lease to determine, who's at fault or not. The next step is to conduct a pre-inspection of the entire property. The tenant would inspect and notify you of any damages that are in the property before he or she moves into the property. Why is this important? Once it's time for the tenants to vacate the property, if there are any damages, you can look at that pre-inspection list and see what new damages occurred, and then use that as evidence to require payment for such damages. You also need to collect a security deposit of first month's rent. Very important also, security deposit would cover some minor damages that would occur during the stay of the tenant. Alright guys, thank you very much for watching this video. I hope you learned a lot from it. Like I mentioned earlier on, these were steps I took when purchasing my first rental property, and I've always achieved success with it. I hope it helps you out as you start looking to purchase your own first rental property. If you like this video, please remember to hit the like button down below, and also subscribe to my channel so you don't miss out on future content. If you have any questions on anything, please feel free to leave a comment down below, and I promise I'll respond to them in due time. Thank you very much once again for watching this video, and see you next time.